Hi, this is David Friedman with my co-host Dave Berkus on TCA Crossroads. This is a podcast where entrepreneurs and investors get great insight and learnings to help them do better investing and get funded quicker. How's that for a start?
That was a mouthful. It's okay. I'll understand. I hope other people can parse that long sentence. We have some really good stuff to talk about today, David. It's my turn to actually drive, and I'm going to drive a discussion about AI coming from CB Insights, as we're going to find out in just a second. So if you have nothing else, put it on and let me drive that thing.
I just want to say I'm excited about AI. Again, it's a continuation from the both the TCA annual meeting as well as from the ACA summit. AI was representing about 80% of all the discussion points. So it's really a critical area. I think everyone needs to understand it. So I'm going to just add slides to the stage and I'm going to let you just let it rip.
Okay, so this is CB Insights, my favorite source for data. And there are many sources of data that we look at, David, you and I, to make these presentations. But this is one for their Q1 2026 results. And I think you're going to have a little eye-opening when you see some of these things. Remember, it's State of AI. So this is all about AI. So the things to remember as a summary are 226 billion AI funding dollars came through the total capital. It rivaled the entire year of 2025. So one quarter, 2026. I've been telling you that AI is kind of getting old. And you're going to see in this that the form of AI we've been investing in the past has turned into a battle of the big guys. And many of the things that we as early stage investors had invested in are now becoming a little overpopulated, as you're going to see. 11% of the share of the deals captured by physical AI. I want to delve into that. Remember, I've been telling you, looking around the corners, the next thing we're going to talk about after the AI tools is robotics. And that's going to come up right now, 11%. And 266 AI M&A deals with big tech snapping up most all of the AI capabilities out there. And what have I been saying to you? That if there are 4,000 AI companies today, 5 years from now, there will be 20. Now, I'm exaggerating, but I'm getting to the beginning of this in what I'm going to talk about today, because the big guys are already doing that, but not at the scale that I think they're going to be doing it in the next year or two. So here it is. Look at the red on the left-hand chart, 226 billion quarter one, just what I said a minute ago, exceeding 217 billion all of 2025. But look at OpenAI on the right-hand chart. It's almost half of that entire 226 billion. So we have to be a little careful that we don't exaggerate, because there have been a couple of very big deals. So if you look at OpenAI, Anthropic for another 30 billion, I'm throwing out the billions as if it doesn't matter, but those are B's. And XAI, look at that one at 7 billion. And then all the rest of those adding up to a total of 226 in AI alone. So no wonder last week, David, that you talked about the Angel Capital Association concentrating on hearing the word AI. I think you said something like you go to Staples and it's like having that red button, something of the kind. Yeah, I understand it. And I'm about to kind of show you what that really means. So let's delve into robotics. Can I? Because I think that's next. It's going to be difficult for us in the early stage. We're going to have to find software that drives robotics, because we're never going to be able to fund companies that are the big hardware companies. So how much of all AI is physical AI? 11%. See the one on the top? How much is in digital health? 7%. Cybersecurity? 5%, 6%. FinTech? 5%. And advanced manufacturing? 4%. So it is robotics, isn't it? So let's delve into why robotics. Look at the physical AI markets for 2026, the chart down below. So industrial humanoid robotics are 17% of that 11%. In other words, Humanoid robotics wins the case for robotics every time. Why? Because it's more romantic, I guess, to talk about. Remember, Amazon had thousands of those little things. They weren't humanoid at all, that were picking off the shelves, but they were really just boxes, they looked like. But when you hear of a humanoid, and some of these companies like Hyundai are now, I think they just bought, if I'm not mistaken, Boston AI, but they are now manufacturing in quantity in the United States humanoid robotics for the automobile assembly line process. This is moving fast. So the thesis that I said a few moments ago about big tech snapping up these AI capabilities before they scale, this is a different chart than we have seen before. So I'm not going to name them all, but there are some good ones like Amazon, the top one, taking human robotics just 2 years after it was created, or Microsoft picking up Cove 3 years afterwards. You could read the rest, but you're getting the idea. These are being bought. If they are AI in robotics, they're being bought by the big guys, the ones that I said would be the ones that ended up being the AI companies in periods that are so soon after those companies are developed. It's, I think, more than interesting. I think it's important. So if we look at the quarter AI M&A exits, on the other hand, looking for the other side of it, how many of them were there? How many small companies were sold? Look on the right-hand scale. If we look at the first quarter, 266 companies were sold to some of these big guys. It just emphasizes one more time, David, that we are in an industry where if we pick one of the great AI companies and it has something new that can be used by the big guys, it will be snapped up within a very short period. And that's what we hope for. But you're seeing in this chart, 2 to 7 years. Any thoughts before we go any further?
Yeah, I totally agree. I mean, this is what's happening. I think a lot of the M&A activities are going into areas such as AI agents. So the agents are being used as part of a productivity tool for the companies that are acquiring them. I just saw an article just pop literally across my desk a few minutes ago that AI is creating problems for a lot of the larger tech companies because they're buying these AI companies, but eliminating staff members because the AI is now improving the productivity and the workload. So the good news is there's a lot of activity in AI. The bad news is it's replacing some workers or displacing workers, and I'm not sure which one it really is.
Well, we've been talking about that now for a period of so many years. My keynotes going back to 2014 through 2017 were, quote, will tech take your job? And substitute the word AI for tech, which is what we would do. And it is exactly what's happening right now. It is a fear that is becoming real. Maybe we ought to have a future edition on which companies or enterprises or industries we think are going to be replaced and which ones might be the ones to bet on. That would be fun.
Yeah.
Okay, so let's move on. So what are some of the investment trends? We are looking at funding right now. See that 226 billion number again on the right-hand side? It represented almost 2,000 deals. And if we are looking at just 2026 year to date, which means first quarter, look at again. The number of deals is greater in the first quarter than it was, well, not quite, last year. The amounts certainly were, but we talked about that being OpenAI. But if you look at previous years, going back to 2022 and 3, it is, for AI at least, a definite curve upward and to the right for number of deals and dollars for companies being snatched up. So that's why so many of the early stage investors are excited. They're hoping that their companies are going to be snatched. And if there are 4,000 of those that we funded over the last couple of years, and there are 20 companies that are buying, it's going to be difficult, but there will be some winners. If we look at the quarter equity funding and deals, again, this first quarter is an anomaly, but there's your 1,900 deals, and there's your 226 billion again. But now look at it by quarter. It's just shocking. I mean, this is 4 times 4 quarter fourth quarter 2025, and you can see the rest. So we're in the middle of a hailstorm of deals. It may or may not keep up, but good for us, hoping that some of our deals come to life and get picked up early. How does that look as far as we look at the world? So the region you'd expect to have the most deals, I don't have to tell you, is North America, specifically United States. So of that 226 billion, 206 billion was United States. Now there was a lot of activity that is beginning to happen in Asia, and we're not going to talk about that today. We'll get down to Los Angeles, but it's just too much for us to try and do it by region. Just realize United States is way ahead on AI of everybody else. So if we look at the median size and the average size of deals, the average size deal in the first quarter, again because of OpenAI, is 159 million bucks. I'd love to have one of those. And the median size is 4.9 million bucks, which tells you kind of the thing we just said. A lot of small companies are being picked up.
Yeah.
And that's a good thing to know, but nice to know that we ought to be aware of the difference between the average and the median, because in this case, it is so spectacularly different. The annual median deal size by investor group. I'm showing this slide for only one reason, and you might guess, David, it is angel on the left-hand side. So the average median deal size by group, this doesn't mean now by company, is groups are putting in $6.7 or $6.1 million in the first quarter in their average deal in the angel rounds. Now, we don't experience that. So where are they coming from? I think it is individual angels. I have a feeling this is people that consider themselves angels that really have an awful lot of money from previous deals they've done, and they have to be classed as angels because they're individuals. If we look at other forms, just before I let you comment, look at CVC, Corporate Venture Capital in the middle, the third one over. Their average deal is 29 million. Corporate deals is about the same. Private equity deals are a little higher. And venture capital deals average $14 million per deal. Remember, angel this quarter was 6 million. So we are becoming more important by deal size as individual angels anyway. And venture capital might surprise you at 14 million because they have loaded with large funds and lots of excess cash. David?
Yeah, I totally buy all the numbers. The one that is very confusing given what I've seen, and we're one of the larger groups around and one of the better investor groups, we don't see $6.1 million. So there's got to be some skew there. And when I look in the past of 2022 to 2026, considering the other thing that we've seen, that the investment by angel groups has picked up, but still 2022 was the highest investment by far, by angel groups. So something doesn't seem to make sense. Either their data is, no offense, CB Insights, but their data doesn't make sense, or the way they're calculating the data is different, but something is amiss there. I do believe, given what I've read, that the VC, PE, and the corporate venture capital is pretty much in line with that which I have seen, read, and been participating in. I'm a little surprised actually on the VC, because I guess that would include, you know what the angels may include? Micro VCs. That's the only other thing that I can think about. So
that's a good one, David. I think you picked on it.
The VCs would go higher. They're looking at putting in $10 to $30 million or more a deal, especially the large VCs. But micro VCs and angels may be lumped together, and there's like 4,000 micro VCs around, and that doesn't surprise me. I'm also wondering about family offices, if they would be included within that angel. But the point is, we see from TCA that we're investing in deals for AI. Mostly the AI is included within a company, so the AI is used by the company to improve their product, their business, their workflow, not as an AI product per se.
Okay. I think you just had an insight when you spoke about including micro VCs along with angels. I'm with you. That was a good one. All right. So which deals were the biggest ones? Well, OpenAI was 122 billion. Anthropic was 30 billion. Waymo, 16 billion. XAI, 17 billion. And the rest of them are less, if you want to think of that. We'd love to have deals of any kind of size like the lowest one here. And it's something that's happening, but it's happening at the upper echelon where we can see these gigantic deals right now moving the needle.
When you look at the rounds, even in Wave, it's Series D, or corporate minority, or Series C. So these are way beyond seed A, D. These are later round where these are ongoing businesses, and that's why they're seeing that traction and the growth in those businesses year over year. That's why you're getting all these high numbers, I think.
Well said. Then let me move on and kind of prove your point. The early stage, 73% of the deals, that's deals now, not dollars, are angel deals. And if we add micro VCs to that, we can always believe that. If we put in $500,000, we count.
Right.
Okay. So 73% of the deals in 2012 up to, it doesn't show you, but it's just about the same percentage this year or this quarter. If I look at it regionally, early stage, it's about 50%. Early stage, US, that's the red. If you look at other areas of the world, is the US is half of all deals being done in the early stage. In the mid stage, the same. As you get to be larger, some of these deals are being done in other areas. And then if we get to other kinds of deals, and it doesn't define what other is, it gets back to about 75 or 80%. So just remember, it is half of the deals being done in early stage are being done in the US. If we look at the annual median funding, which is interesting, by deal stage and go back to early stage, now it looks a little more logical. But again, if you add what you did, the average early stage median deal is 3.4 million. It's up from 3 million in the fourth quarter, but you're getting the idea. The average of 3.4 million is a lot more than our groups put in. And even when we syndicate, it's a lot more than we syndicate. So early stage, probably including micro VCs, 3.4 million on the average deal makes sense. Thank you, David, for that insight.
By the way, I think that one makes more sense when I take a look at the 3 million, because the asks on these deals are somewhere between $2.5 to $4 million. So I can actually buy that from a syndication point of view.
You know, we've been joking for a decade that when we get an application, the number is always 5 million. I know that's reduced lately because expectations have reduced and it actually takes less to get a company into the market. But it was a joke that everybody wanted 5 million and they were coming to the wrong group for it, but they were always asking. All right, headcount is interesting. So if we look at AI companies, the fastest growing markets by year on year headcount change are AI companies, of course. Almost 70% of all of the headcount comes from AI. And then defense, 6.4 or 64%. And it goes down from there. So AI is accounting for the greatest headcount increases. And that's something the Department of Labor keeps a lot of track of. And if you're in the state government of, pick a state, Ohio, this is one of the numbers you want to pay most attention to. The jobs created by these early stage investments in your state are going to result in a whole lot more tax revenue over time. So AI is the one. If we distribute those deals, again, by number of employees, there's no reason to doubt that most of the early stage deals have less than 50 employees, upper left-hand side. I would wonder why early stage deals with 200 or more employees, that's the upper right-hand side, even has anything in it, but it does, 56 deals. And you can read the rest of these if you want, but that really is the information we wanted out of this chart. Early stage deals account for lots of headcount, even though it's less than 50 employees per. Now, How many unicorns are there, David? You want to take a guess right now? And how many might have been created in the first quarter? Just take a guess.
Oh, I'm going to be so off on this. I
Yes,
would
you are.
say there are probably about 35 unicorns.
This quarter?
This quarter, probably, yeah, maybe 20 unicorns.
How many unicorns altogether going back to the beginning of time?
$1 billion valuations?
Yep. Mm-hmm.
Ooh, I don't really know. Several
Here
hundred.
it is. 390 companies have reached over $1 billion of valuation as of right now. 21 actually were added this first quarter of
I was
2020.
actually correct.
You were very close.
Yeah,
I didn't want to ruin the surprise, but now we have a number, almost 400 unicorns altogether. Pretty good number.
Wow.
And how many unicorns by region? Well, how can I doubt that 278, 15 of the new ones are from the United States. Nothing new there.
No.
So some exit trends really fast. Quarterly exits are a little down from fourth quarter last year, but that's okay. They're still very high, 266. 21 IPOs in the first quarter of this year. That's a surprise. There were 20 in the fourth quarter of last year. Remember, there were none in Q1 of last year, or one, and two in Q2. So it is increasing again, which if you may have kind of thought about, the engine's pulling the train again. And if we're at the back of the train with the smallest deals, our deals may move forward faster than they had during the last 5 years. And then a couple of SPACs went public. I have an opinion I don't want to give you out loud. U.S. trends, same thing. I'm not going to spend time on it. 980 deals, 206 of the 226 billion. Not something to worry about. The percentage of deal by stage, once again, in the U.S., early stage, 74%. Nothing new there. But now let's get down to Los Angeles as our final thing to concentrate on. How many deals in Los Angeles have been happening during this last couple of years? Well, look first at the far right-hand side, and you'll see the first quarter of 2026, 0.7 billion or $700 million went into 35 deals in Los Angeles. Well, that's pretty something to hear, compared to 39 in the fourth quarter of last year, and about the same amount of money. And Q2 had a big one, and we'll have to find out what that is in a moment. So you can see that we are in Los Angeles putting some money into these deals, and the dollars, not quite as much as 226 billion, but it's a number that starts. So how does that work in Los Angeles as far as stage? No different. 77% of all of the deals in Los Angeles are early stage. And then you can read for the rest, but 77% is the number I wanted to get across. What are the companies that we invested in the first quarter of 26? I don't recognize any of them, David. And you can read Revel and Machina Labs, Machina Labs, I'm sure, Freeform, Sift, and the Highlight. I don't know any of them.
Yeah.
Do you? Have I hit something new?
Mm-mm.
Well, that is my final slide. And so I'll take it off and we can discuss it. But that is the state of AI. And my takeaway is AI is beginning to look more and more like robotics. And I think that if we want to look around corners, my favorite expression lately is AI is going to look like consolidation. Robotics will increase. AI in robotics, of course, because you can't do a robot with AI without AI. And the next thing you're going to see is security. And then you're going to see all the med tech deals and pharma deals. So if we can look ahead, those are the three next things to look for. And maybe we can begin to delve into that later on. There you go. Your comment.
Yeah, I totally buy into that. I'm 100% behind your top markets. I mean, go back to my February discussion on where the trends are. They correlate clearly with what actually happened. I tend to believe that AI is huge in pharma, bio, molecule discovery, AI supplementing or used in medical devices. Totally buy it. I think what's happening is very akin to what we saw in the 2000 era with internet, where everyone was running into internet type companies, and we were seeing
Yes.
that explosion. And now you don't, if a company doesn't have internet, it's like a person not breathing. So you're going to see the same thing in a few years. AI probably will still be the word du jour for the next couple of 3 years, especially in automated factories, autonomous driving, defense, cyber. You'll move from generative AI into agentic AI. So we'll see that over the next several years. And it may be 5, 7 years. You won't hear AI per se. It'll be part and parcel of what the business is.
Well said.
Also,
Dan. That's
yeah. So I also want to point out one other thing. I believe that the investment right now is not in what I call native AI. You're not investing. You'll see a lot of investments in OpenAI and the big aggregators, or the big hyperscalers is what they call them, and also the big LLMs. OpenAI, Anthropic, Rock, whatever. But I also believe a lot of the potential investments are in these smaller companies that have developed AI agents, and akin to the picks and shovels in the gold rush era. There was the mining of the gold, and then the people who really, really got rich consistently, Levi's, the picks, the shovels, the wheelbarrow manufacturers, the builders, the little, of these areas, these small towns. I think that's where we need to take a look at, especially for angels, which don't have the billions of dollars to invest in OpenAI other than in the public market. I think there's a lot of opportunity for investors to select and choose how they want to invest, but there's also a great opportunity for the entrepreneur who comes up with something that's transformational, not just a better mousetrap. So I'll leave that, my final words of wisdom, to you. You can close it out. Great presentation. I really enjoyed it.
Thank you. Well, CB Insights always does well for us. I want to pitch. Can I pitch for a second?
Absolutely.
Okay, so I wrote a book. It was published a couple of months ago. It's called The Leader's Toolkit, and it's getting great reviews. And I've done numerous interviews with people who are reviewers. And I just wanted to bring the audience to know that it's available on Amazon or any other bookseller in any format you want, from audiobook to Kindle to softcover to anything. So anyway, the Leader's Toolkit is cheap. I priced it at $15.95. What a bargain. David, you can close it out.
Now, I just hope that everybody who's listening in, the entrepreneurs, the investors, people that are in the corporate world, people that have their own companies, people in the gig economy, got something out of this. AI is here to stay. It's going to continue to be big. Focus in the area, as Wayne Gretzky said, I focus on where the puck is going. AI is showing you where that puck is going. That's where we should be investing. And I am extremely excited about the future of technology, with AI particularly. So with that in mind, I wish you all good investing, and I wish all you entrepreneurs the great success in finding that fund, and we'll catch up with you next time. See you later, Dave.
Thanks a lot. See ya.